This is Dr. K. Jagannayaki, Professor in MBA Department, Institute of Aeronautical Engineering, Hyderabad. So, as a part of financial statement analysis, today I would like to discuss with you about funds flow statement. After going through this topic, the learner will be able to understand the concept of fund, calculation of fund from operations, calculation of changes in working capital, and preparation of statement of sources and application of funds. So, funds flow statement, as we know that it is a financial statement which shows as to how a business entity has obtained its funds and how it has applied or employed its funds between the opening and closing balance sheet dates during the particular year or period. So in last session we have discussed about cash flow statements. So how we used to generate the cash from various sources and how do we spend the generated funds on various activities of the business. In the same manner, even in case of fund flow also, we used to discuss about the sources of funds and application of funds. It can be described as where got, where gone statement, and funds usually refers to cash resources, and fund statement is prepared to show the net effect of various business event on the current resources of the organization. So here, as I said, it is sources and application. So where got means from where we used to get the funds, and where gone means that statement it itself it represent the application of the sources of funds, how effectively we have used the funds on various business activities. So it is a statement prepared to analyze the reason for changes in the financial position of a company between two balance sheets. So under funds flow statement, we'll take two balance sheets and we try to compare the changes in its financial position. So what makes the change in the financial position of a company when we are going to compare two different balance sheets? It shows the inflow and outflow of funds. Inflow of funds is known as sources, whereas outflow of funds is known as applications of funds for a particular period. So, in other way, fund flow statement is prepared to explain the changes in the working capital position of a company. So, here we are going to discuss about two types of inflow of funds. One is long-term funds that are raised by issue of shares, debentures, or sale of fixed assets. The other case, the funds generated from operations. So these are the two major sources that we are going to discuss under funds flow statement. Then, what are the benefits of funds flow statement? So, funds flow statement is useful for long-term analysis. It is very useful tool in the hands of management for judging the financial and operating performance of the company. So just by preparing the funds flow statement, by knowing the sources and application of funds, the management can able to evaluate the financial and its operating performance. The balance sheet and the profit and loss account, which is also known as income statement, fails to provide the information which is provided by the funds flow statements. So with the help of balance sheet, we can assess the assets and liabilities, and based on the profit and loss account one can able to assess the profitability position of the company, but it may not disclose the changes in financial position of an enterprise. So that should be done with the help of funds flow statement. So such an analysis is of great help to the management, shareholders, creditors, etc. So just by preparing the funds flow statement, we can able to find out why there is changes in financial position of an enterprise. Then funds flow statement analysis helps the management to test whether the working capital has been effectively used or not, and the working capital level is adequate or inadequate for the requirements of the business. So what working capital means, it is the difference between current assets and current liabilities. So that difference the company they are going to utilize to operate their day-to-day activities. So it is always necessary to the company, they have to maintain their working capital in adequate form. If it is less or inadequate, it may not going to fulfill the day-to-day requirements of the business. The working capital position helps the management in taking policy decisions regarding payment of dividend, etc. So that should be done on the basis of the level of working capital. If it is adequate in nature, then only we can able to pay the dividends to the public, or else it may not be possible. Then fund flow statement analysis helps the investors to decide whether the company has managed the funds properly. So being an investor, every investor they seeks for maximum returns. So whether they have security for their funds, whatever they are going to invest, so that should be depends upon the financial status of the company where we want to invest in. So for that reason, the investors they used to look at the financial or the funds flow statement, whether it is the companies managing whatever available funds, whether they are adequate or inadequate, whether they can be managed the funds in proper manner or not. So by looking into all these aspects, the investor also they used to decide whether to invest in that particular company or not. It also indicates the credit worthiness of a company, which helps the lenders to decide whether to lend money to the company or not. So, with the help of financial statement under which we are going to discuss about the funds flow statement, even the bankers and for other financial institutions, those who want to lend money to the company, they used to check the credit worthiness of a company. So that should be decided with the help of funds flow statement. It helps the management to take policy decisions and to decide about financing policies and capital expenditure for the future. So, based on the funds flow statement, just by understanding the sources and applications of various funds, the company also they will come out with different types of financial policies, and also they used to plan for their capital expenditure for the future. Then coming to the procedure of preparation of funds flow statement, it involves four steps. The first step includes prepare the statement of changes in working capital. Second, analyze the changes in non-current assets and non-current liabilities to find out inflow or outflow of funds. Third step, find out funds from operations. And in step 4, prepare statement of sources and application of funds, which is nothing but the funds flow statement. So let us start with statement of changes in working capital. This is the first step in funds flow statement preparation. So the statement of changes in working capital. So just we used to compare the balance sheet of two different periods, and we used to compare the previous year with that of current year, and based on that we can able to find out what kind of change in working capital, whether there is an increase or decrease. So according to this statement of changes in working capital, under particulars we used to consider two things. One is working current assets and another one is current liabilities. So as we know, working capital is nothing but the difference between current assets and current liabilities. So what items comes under current assets? See here, stock, debtors, cash in hand, cash at bank, bills receivables, prepaid expenses, accrued income, short term loans and advances, marketable investments. So these are all comes under current assets. And next, current liabilities. So here we'll consider creditors for goods, bills payable, outstanding expenses, bank overdraft, unclaimed or unpaid dividend, short-term loans and advances, provision for doubtful debts, and provision for discount on debtors. So these things comes under current liabilities. So by comparing these assets and liabilities, if there is an increase, then how much increase that we have to specify in increase column, and if you have any decrease in terms of the change in working capital, that we have to mention on decrease side. Then finally one has to find out working capital. It is the difference between current assets minus current liabilities. So whatever total of current assets and current liabilities, by subtracting liabilities from assets, we should find out what is the working capital in the previous year and the current year. Then here we used to make out either decrease or increase in working capital. So this is the pro forma of statement of changes in working capital. Then second step is working capital changes. See, just by using step 1, we can able to find out whether there is an increase in current assets or increase in current working capital. See, if there is an increase in current assets, it means that there is an increase in working capital. If you find increase in current liabilities, it means that decrease in working capital. If we find that decrease in current assets, it leads to decrease in working capital. It means decrease in terms of the sources. Then, if you see the next one, decrease in current liabilities, it indicates that there is an increase in working capital and which denotes the outflow. Then, coming to step 3, finding funds from operations. So, in this step, we need to calculate the funds generated only from the operating activities of the business and not from the investing or financing activities of the business. So the funds from operation shall be prepared as follows. So here we used to take profit and loss account with some kind of adjustments. So adjusted profit and loss account will take in order to know the funds from operations. So it consists of this adjusted profit and loss account consists of two columns, particulars amount and particulars amount. So debit side we used to talk about as it represent nominal account all expenses or losses that we are going to mention on debit side, whereas all incomes or gains that should be mentioned on credit side of the profit and loss account. So here we used to consider the depreciation, preliminary expenses written off, the goodwill written off, discount on, loss or sale of non-current assets, provision for tax, proposed dividend, transfer to reserves, interim dividend. Then we should know balance carried down. So that should be taken just by considering the totals of both asset side and liability side. Basing on that, sometimes in one side we may have excess. So the same we used to represent that leftover balance on other side of the profit and loss account. So coming to the right hand side, which is known as credit side, so we should consider by balance brought down, by profit on sale of non-current assets, by transfer from reserves, by income from investments. So all together we used to consider as by funds from operations. That balance figure itself it indicates funds from operations. So how much funds we have generated just by taking into consideration some kind of business activities, sale of goods, sale of fixed assets, and sometimes we used to transfer the funds from reserves. So even sometimes the companies may also raise funds in the form of issuing shares by way of investments. So everything comes under funds from operations. So for this, here what we used to do to find out that net income, for that again we need to add depreciation on fixed assets, amortization of intangible assets, amortization of loss on sale of investments, then amortization of loss on sale of fixed assets, losses from other non-operating incomes, tax provision which is created out of current profits, and proposed dividends will also added, transfer to reserves. And from that, we have to subtract deferred credits, profit on sale of investments, profit on sale of fixed assets. If we have any return back reserve or provisions, that also subtracted from the previous one. And coming to step 4, which is known as the statement of sources and application of funds. So this is the funds flow statement. So while preparing the funds flow statement, the sources and uses of funds are to be disclosed clearly so as to highlight the sources from where the funds have been generated and uses to which these funds have been applied. So this statement is also sometimes known as the sources and application of funds statement or statement of changes in financial position. So the format of this funds flow statement is like this: funds flow statement as on so and so date we have to mention, then left side write down the sources of funds, whereas right hand side application of funds. So coming to the sources of funds: funds from operations, sale of fixed assets, issue of shares, issue of debentures, loans taken, sale of long-term investment, receipts of dividends, legal claims, refund of tax, etc. So these are all comes under the sources of funds. If you see the first statement where we discussed about the changes in terms of working capital, increase or decrease in working capital. So in first statement, if you find decrease in working capital, that should be added to the sources of funds. And coming to application of funds, so the funds which are spent on various applications of the business like drawings, purchase of fixed assets, redemption of preference shares, redemption of debentures, payment of taxes, payment of dividend, repayment of loans, all those things comes under application. So based on the statement 1, the statement of changes. So in that statement, if we have increase in working capital, and that should be added to the application of funds. So like how we used to have the information about what are the sources of funds and where we have exactly applied those funds in the form of application of funds. Then coming to the sources of funds, just by issuing equity and preference shares among the general public, the company raise funds, and by paying some kind of premium amount on securities trading, and which is known as receipt of securities premium. And even companies also raise funds by issuing debentures, by having receipt of long-term loans from banks and other financial institutions, and the receipt of public deposits and other unsecured loans, sale of fixed assets, sale of investments. And sometimes we should also consider extraordinary receipt awarded in legal suit, income from long-term investments, funds from operations, decrease in working capital. These are all known as sources of funds. Then coming to the application of funds, redemption of preference share capital, redemption of debentures, premium paid on redemption of debentures and preference shares, repayment of temporary loans, secured and unsecured also come under that, purchase of fixed assets, even purchase of investment, extraordinary payments and non-recurring losses like loss by fire and damages paid, payment of dividend and interim dividend, payment of tax, increase in working capital. So these are the things how the company they used to spend on these activities which are known as application of funds. Then coming to the format of funds flow statement, there is no prescribed format as such for the preparation of funds flow statement. The only point to be remembered that it should be presented in a clear and systematic manner. So, however, funds flow statements may be prepared in any of the following formats. The first one is reminder type, second one self balancing, and third one is reconciling type. So, coming to the reminder type, so first we used to mention the total of sources of funds from where we have generated the funds, and application how we have spent the funds on various business activities. then just by taking the difference between these two, we can find out the change in working capital. And the second type is self-balancing type. So here we'll make it into two columns, separate columns, where one side we used to mention sources of fund and other side decrease in working capital, which is brought down from other side. Whereas the right hand side will specify the application of funds and based on statement 1 whether there is an increase or decrease in working capital, and that should be mentioned on either of the side of the funds flow statement. But based on the statement of changes in working capital, if you find there is an increase, and that should be added to application of funds. Then coming to the third type, reconciling type. So where we used to write the funds flow statement as working capital at the beginning of the year, then for that we need to add sources of funds. From that we have to subtract application of funds. Then we'll get working capital at the end of the year. So funds flow analysis, it consists of two different analyses. One is working capital analysis, another one is cash flow analysis. So in general, funds can be flowed in two ways. One is the sources from various activities or operational source, other one is from the cash. So coming to working capital analysis, it is the analysis and reporting of working capital. So working capital is that the amount that is excess of current assets over current liabilities. And this analysis consists of two statements. One is statement of changes in working capital, other one is statement of sources and application of funds. Whereas second analysis, cash flow analysis, and it deals with the analysis of inflows and outflows of cash. So cash flow analysis result in two separate reports. One is sources and application of cash. Funds flow statement explains as to what caused the changes in the balance sheet items between two balance sheet dates. And coming to the importance of funds flow analysis, it is an important financial tool which analyzes the changes in financial position of a firm, showing the sources and application of its funds. And it provides useful information about the firm's operating, financing, and investing activities during a particular period. The following points highlight the importance of funds flow statement. So, funds flow statement helps in identifying the change in level of current assets, investment, and current liabilities financing. And second one, it also helps in analyzing the changes in working capital level of a firm. It shows the relationship of net income to the changes in funds from business operations. And it reports about past funds flow as an aid to predict future funds flow. Because in funds flow, we used to take balance sheets of two different periods. Based on the previous and the present, we used to predict the future funds flow. It helps in determining the firm's ability to pay interest and dividend and pay debt when they become due. So it also tells us about the credibility or credit worthiness of the company if they are going to lend money from various sources. It shows the firm's ability to generate long-term financing to satisfy the investment in long-term assets. So just by looking at the funds flow statement, we should know whether we can able to satisfy the needs of long-term financial financing. That should be possible with the help of analyzing funds flow statement, and it helps in identifying the factor responsible for changes in assets, liabilities, and owner's equity at two balance sheet dates. So, coming to the comparative analysis of income statement, balance sheet, and funds flow statement. So, let us start with the meaning. So, statement of showing result activities conducted during the year so that we can assess with the help of income statement or profit and loss account. Coming to the balance sheet, it is a statement of assets and liabilities of an organization. And funds flow, it shows the statement of changes in assets and liabilities of an organization. Then coming to objective, the basic objective of income statement is to ascertain profit or loss, whereas balance sheet to ascertain financial position, and with the help of funds flow statement, which is used to know the change in financial position over the year or how the profit has been utilized. Then coming to the legality, obligatory to prepare as per Schedule 6 of the Indian Companies Act 1956, whereas balance sheet it is obligatory and funds flow non-obligatory. Coming to the format, for income statement, no format but should be subject to certain requirements. Whereas balance sheet, it will have prescribed format. One has to follow the same format. And funds flow statement will also not have any prescribed format. Then coming to the sections to be considered under income statement, we used to know about the income and expenses. Whereas based on balance sheet, one can assess assets and liabilities. And with the help of funds flow statement, we can able to understand the sources and application of funds. And coming to the basis, when you can take income statement, which is prepared on the basis of nominal accounts and other information. Even balance sheet is also prepared on the basis of ledger balances and with some additional information that is provided by the company. And coming to funds flow statement, prepared on the basis of two consecutive balance sheets. Let us take some problems. From the records of a company, the following information has been extracted. Net profit after providing for the following items: 80,000, loss on sale of equipment, that is 15,000, premium on redemption of debentures 1,000, discount on issue of debentures 2,000, depreciation on buildings 15,000, depletion of wasting assets, goodwill written off, interim dividend, profit on sale of fixed assets, excess taxation provided, income from investments, transfer to general reserve, preliminary expenses written off, profit on revaluation of investments. So, using this data, now we have to prepare the funds flow statement. So, first statement is the statement of changes in working capital. So, here we have to find out the funds from operations. So, first, uh, start with net profit, which is already given, that is 80,000, and for that we have to add non cash and non operating expenses. So from the given data we have the list of items that fall under non cash and non operating expenses are loss on sale of equipment, discount on issue of debentures, depreciation on buildings, depletion of wasting assets, goodwill written off, excess taxation provided, transfer to general reserve, preliminary expenses written off, premium on redemption of debentures, interim dividend. So the total we have 1,05,500. So if you subtract that, we'll get if you add up to the net profit, then we get 1,85,500. From that we have to subtract non-cash and non-operating incomes. So first case we have taken expenses, now we are taking income. So where we used to have the following items: profit on revaluation of investments, profit on sale of net current non-current assets, which are also known as fixed assets, income from investments. Then from that we'll get funds from operations. Then if you take another example, from the following data calculate funds from operations. So we have given sales, cost of goods sold, salaries, rent, selling expenses, office expenses, preliminary expenses written off, tariff to general reserve, and postage and telegram, excess provision for tax written back, loss on sale of fixed assets, interest received on investments, profit on sale of investment, and from profit and loss account, we have given opening balance and closing balance. So just by considering this, first of all, find out operating incomes, which is given in terms of sales. From that, we have to subtract operating expenses, which includes cost of goods sold, salaries, rent and selling expenses, office expenses, postage and telegram. Then we'll get funds from operations. Then, whereas in case of third illustration, from the following data prepare funds flow statement. So here we have prepared statement of changes in working capital. So the format we know, we are going to compare two balance sheets of two different periods, 2015 and 2016. So first of all, we should mention the current assets, stock, debentures, debtors, bank, cash, and 2 years. Just find out whether there is an increase or decreasing by comparing these two values. So accordingly, if you observe stock 2015 and 16, there is an increase of 10,000 in terms of stock, and debtors 15,000, bank 2,000. Whereas coming to cash, in 2015 we have 1,000 cash, whereas in case of 2016 decrease, that is 800. And then current liabilities, where which is given in the problem itself, we include sundry creditors, bills payable, outstanding expenses. And again, just to see that if there is an increase or decrease, then find out working capital, the difference between current assets and current liabilities, and net increase in working capital, that is 82,800 minus 2,800. Then there is an increase of 80,000. So based on that, we have also prepared funds flow statement where it indicates sources of funds and application of funds. So what are the things that comes under sources of application from the above example? Means increase in share capital, issue of debentures, secure loans received, sale of plant and machinery. Then we can find out funds from operations, which is taken from profit and loss account. Whereas coming to application of funds, we have redemption of debentures, purchase of furniture, purchase of investments, increase in working capital. So this is the funds flow statement, which indicates the sources from where we got the funds and how we have used that funds on various business operations, which are known as application of funds. Thank you.
Like, share, and subscribe. Hit the bell icon for more updates.